Interviews like this with this type of guest today, they're a rare occurrence. Rarely do you get a 30-year mortgage veteran who also owns and operates his own brokerage, who also is the president of the largest state-run industry-specific organization for mortgage brokers, who also does things like advocate on behalf of the industry and makes change happen. There is so much to unpack in this episode. It's going to make it one of those can't miss episodes. Check this out. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest. This episode's been 2 years in the making. This guest is a Cuban-American from Miami. He's the original Mr. 305. Pitbull has nothing on him. He owns his own mortgage brokerage. He is a writer, a published writer. He once used to write speeches for the mayor of Miami-Dade County. He is the president of the Florida Association of Mortgage Professionals. He is my friend, not my new friend, but my friend, the one, the only Orlando Diaz. Orlando, welcome to TLOP.
Thank you. I don't think I've had that introduction ever.
That is the goal. Every single time I want that type of response out of you or any guest that we may have. I once had, you probably know Bob Nemi,
yes,
from the industry. And Bob's like, Dio, can you please record that? I'm like, what's recorded, Bob? He's like, no, cut it up and send it to me. Every time I speak, because Bob travels the country speaking at conferences across the nation. He's like, I want that played. I'm like, dude, I would love it.
Yeah, I mean, I was like, wow, I've really done something.
Yeah, you have, man. It's interesting because we've known each other for several years now, but even doing the prep work for today's podcast episode, like you and I share this in common. Like we both have a journalism communications background. Yeah. You were a speechwriter for the mayor of Miami-Dade. I met you because you're the president of FAMP. Yeah. And for those that don't know, the Florida Association of Mortgage Professionals, I call you all the second largest broker-centric trade organization for the mortgage community.
Yes.
Right? Now, I know you're the Florida Association. However, I mean, to me, FAMP is a national organization. Like, you're going to have your FAMP event this June, right? Yeah. Every summer. And I go to it every year.
It's August.
Oh, it's August.
Yeah.
August. I go to it every year. It helps. It's in my backyard, right? You live in Miami. I live in Orlando. You typically do them in Orlando. Mm-hmm. And when I go there, you're drawing people from California. You're drawing people from New York. It is hundreds, if not thousands of people. Some of your speakers are national speakers. So if we talk about that event today, y'all just know it has my stamp of approval as one of my favorite events to attend. And don't let the word Florida throw you off. I mean, this is a very mortgage broker centric organization that puts on an event that's great for all. But like, you still produce loans. We were talking about that. Like, you're still on a bad month doing 4 transactions, a good month doing 7 transactions, and some of your transactions are $37 million transactions. Like, yes, you do the $370,000 ones as well. And I like calling you Mr. 305 because you're a little bit older than Pitbull. And you're born and raised, well, not born, but you're raised in Miami.
Raised in Miami. Yeah.
Right? Yep. You said your parents are Cubano, they're of Cuban descent, but you were born in Nicaragua? Or
I was born in Nicaragua in the cigar trade.
In the cigar trade.
In Esteli, Nicaragua. So all cigar smokers would actually know Esteli, Nicaragua. It's
they would?
Yeah, cigar aficionado, top 10 cigars every year. There's 3 or 4 from Esteli, Nicaragua.
Nice. And we're going to have so many different directions to go. You and I were talking offline about some of the condo reform. I mean, you were a big part of that.
Yep.
So I want to unpack and have you share those stories. I want to talk about specifically, like, what are you all working on as FAMP when it comes to advocating for the broker community moving forward? What excites you about our industry moving forward? As well as learning your personal journey and your story, how you got into mortgage. So if it's okay with you, I think I'm going to start with, how did you find yourself, right, a communications major with a passion for writing? How did you find yourself in the mortgage industry?
Well, I always liked, like I had mentioned before, I used to watch those infomercials late at night. And I've always wanted to have financial freedom. It's not that I wanted to be some billionaire with a bunch of cars and stuff, material stuff. I just wanted financial freedom. I wanted to not have to be stuck in a place from 9 to 5 and not wanting to be there. I always felt that if you dreaded going to work on Sunday, you dreaded going to work on Monday, then you're doing the wrong thing.
Okay.
And I hated that, and that was what was happening to me. So I was trying to find a way that you could do something that you could feel passionate about, that you can help people, and at the same time make a lot of money. And really, real estate for me was, I started buying properties, and then I started using mortgage brokers. And those mortgage brokers were like, I was saying, how did you get a license? Yeah. And so I said, all right, then if they can do it, I can do it. And then other people, when I got my license, people were like, hey, can you help me out? And then I said, you know what? There's a career here. So I took the jump, left my job, which was cushy, and
what year was that?
That was 1998.
So 1998. And was your cush job at that time? Were you writing for the mayor of Miami-Dade, or had you moved on from that and were doing something else?
Yeah, I was writing for him in 96 and 97. Then I went into my first sales job because I thought, hey, if I get into a sales job, maybe I could be good at it. And I really was good at it, but I didn't like the product I was selling.
What were you selling?
Like MIS, IT, routers and switches, and I didn't really know the product I was selling, but I knew to make a connection with the people that were actually buying.
Okay.
So I said, okay, the relationship part was more important than the actual product knowledge in that sense. And then I said, okay, but if I find something that I like, then I could sell more passion. And then when I finally got into the real estate industry and I started helping, when I put the first person into a house and they were so appreciative,
You're hooked.
I was hooked.
Most of us are hooked. I call it being bit by the bug.
Yeah.
I mean, I was making no money. I was 25 years old. I had a pregnant wife at home, but I loved every effing minute of coming to work.
Yeah.
And like you, when I was selling TV advertising down in West Palm, I dreaded being there. I was good at it. I was breaking records for rookies. Yeah. But I hated every minute of it. So I tell younger originators, like, within 6 months, whether or not this is fit for you. Oh. But I think it's interesting. You were a real estate investor first.
First, yeah.
Okay. And were you buying real estate when you were a speechwriter?
Yeah.
You started investing in real estate.
I was doing fix and flips.
Okay.
And
in the 90s?
In the late 90s.
Okay. You're fixing and flipping in the late, like when you could actually buy a home for like 90 grand.
Yeah, 90 grand, fix it, sell it for maybe 130.
Okay.
And they were hard to find. Then all of a sudden prices started going up, and the deals weren't penciling. Mm-hmm. And then that's when, at that point, I pivoted towards mortgages and helping people get mortgages. And then I was just, the pay, is pretty good if you're producing a lot. And then I was like, wow, this is really great money, and I'm helping people, and I like what I'm doing. I go, it's a no-brainer. So I'm a lifer now. Nice.
We have so much to unpack, but what I'm gonna do, Orlando, real quick, is I'm gonna take a quick pause. We have some bills to pay, so I want to hear a quick word from today's show sponsor. Then we'll come back. Check this out. Y'all, something big is happening at Lower Mortgage. And if you're paying attention to this industry, you've probably noticed. In just the last month alone, Lower has added some serious horsepower. We're talking top producers representing over $350 million in volume. These aren't rookies kicking tires. These are heavy hitters who've done their homework and made the move. That should tell you something. On top of that, Lower just acquired Movoto, a top 5 real estate portal with over 150 visitors just last year. Before that, they brought in Neat Labs, and now they're launching Lower OS, a next-gen mortgage platform that's cutting loan delivery times down to 10 days. This isn't a company standing still. Lower doubled their volume last year, and they're projecting another 40 to 50% growth this year. The best in the business are taking notice, and they're voting with their feet. Here's the reality. The companies that are going to win in this market are the ones investing in technology, building real infrastructure, and competing at scale. Lower is doing all of that. They're going head to head with the Rockets of the world, and they're built for originators, not against them. If you're a producer who wants to be a part of something that's actually going somewhere, not just surviving, but growing, this is the moment. Lower Mortgage, the momentum is real. All right, so we're back. So your start, it's so like so common, right? Most of us didn't go to school for mortgage. So I love knowing, hey, this is where you started, right? You learn how to communicate. You worked for the man. You probably weren't happy with the income you were earning. Started seeking outside hustles. One of those was fixing, flipping homes. When that dried up, you didn't give up. You pivoted, and you just went a different direction, stayed in the same industry, and you originated, which meant you then had to survive 2008.
Yes.
You survived 2008. What was your pivot from there?
Well, in 2008, when it came, the writing was on the wall come 2006, but we didn't think it would be a complete stop.
No one
it
did.
was. I had a bigger mortgage shop at that time, and we were closing 30 to 40 loans a month. And September 2008, we closed 17 loans. In October, we closed 3. And then it was 1, 0, 1, 0 every month after that. And it was just not sustainable. We still had the overhead. So the world came crashing down.
Yeah, and you were in Miami-Dade. I mean, you're the original Mr. 305. And that was definitely a hotbed for things to go sideways or things to go south. So it went south and it went quick. And you owned your own brokerage back then too.
Owned my own brokerage. Basically, what ended up happening is one of the banks that I used to do foreign national lending with called me and said, "Hey, we need some fee-based business, and can you help us run a Fannie Freddie division at FHA division at our bank, started from scratch?" And I said, "I have nothing coming in. Yeah. What are you gonna pay me?" They said, "Oh, that's the part. We can only pay you $25,000." I was like, $25,000? I'll take it.
Wow. This is like 2008, 2009.
September 2009, they offered me that position. Yeah. And
I hope it came with some kind of a bonus or production-based incentive.
Some commissions on it, but I think I broke $38,000, I think, that year.
Wow.
And but it was $38,000 that I didn't have and I needed.
Yeah. Because you worked in banking, up until like 2013, 2014?
2014. And in 2014, in August of July of 2014, I saw an email for a bank statement program from Angel Oak.
In 2014?
2014.
Like, and Angel Oak was one of the OGs when it comes to non-QM.
OGs.
They're OG non-QM.
And I saw that email come in, and I said, "We're back.
We're back, baby."
And in August of 2014, a month later, I incorporated my company, Metro Fund.
Wow. And Metro Fund's still around. You're still funding loans. You have a team that's been with you for well over a decade.
Yeah.
But it's interesting because that part of you is obviously a very important part. Like, you're successful. You make really good money. You employ others. They make really good money. Mm-hmm. But, man, I got to be honest with you. I love, respect, look up, and even admire what you're doing outside of Metro Fund. Yeah. Right. Although I know it's a big part of who you are and why you're where you are. But I mean, you're the president of FAMP, not just one time over. It's your second time, right? So were you vice president, then you were president, or you just went straight into president?
I started off secretary, and then I went to vice president, and then I became president.
Okay. So for those that don't tune in often enough, like, look, I'm rocking my CMB pen. It's a very proud accomplishment to be a certified mortgage banker. Anytime I get a chance to speak, I make sure I wear this pen. I love your FAMP event, right? I can't wait. I need a better introduction to Kember because I would like to be more involved with NAM. Mm-hmm. And I know of him. I think he knows of me, but I don't think we've actually had a chance to like break bread and get to know each other the way that you and I have. But
I can make that introduction to Kimber.
Yeah, definitely.
Kimber is definitely somebody that you should know in this industry. He started off as a Florida president of FAMP, and now he's on his second go around as president of NAM.
Yeah, but what I was going to say is, like, people that tune in, like, they know how much it means to me that other people advocate for their industry, that we're involved. Yeah. Like, that to me means you're a true professional. You're not a worker, right? You're a true professional. Workers don't care about the industry. They show up, they exchange their time for a paycheck. And don't get me wrong, we need plenty of people who are workers, right? Just like I love thinkers, but sometimes you just need a doer, right? I love a doer who also knows how to think. Yeah. But I want to talk about you, what you're doing with government affairs, what you're doing for advocating on behalf of the industry, because we all benefit. Bankers benefit, credit unions benefit, brokers benefit when Orlando and his team are advocating, whether it's in Tallahassee or in Washington, D.C. But what made you want to get involved in your organization, in your trade organization to begin with? Like, what year was it? What was your catalyst that prompted you to become a member of FAMP?
The catalyst for me was Dodd-Frank.
So you're going back to 2010.
Yeah. The catalyst for me to get into FAMP was Dodd-Frank. When Dodd-Frank came out, it was ominous. It was they're gonna audit every company every year. I mean, they were saying they're gonna come in and they're gonna fine everybody, and if you're not doing this, you're not doing that, and it was scary as a business owner. In fact, that's why a lot of these like net branches companies actually sprouted, because nobody wanted to handle the compliance piece. So I was like, no, I had a company prior, and this new company, I want to be able to know what at the time I was still at the bank, and the bank wanted me to be able to help implement Dodd-Frank. So I kind of learned a lot about Dodd-Frank, and then I went out and reached out to FAMP and see what FAMP was doing for the small business owners, because I was in my mind, I knew at some point I was going to jump back into ownership, and that's when I started to realize that my voice could do something. I wasn't really satisfied with the answers I was getting, so I started to give my opinion, and my opinion started to be heard, and then that's how it really spiraled into what it has become, especially in the last 2 years, where GA has been my main focus.
Yeah, and we're gonna get into that. Like, but
government affairs. I'm sorry,
government affairs. No, yeah, GA, not general admission, not grad assistant. We're talking government affairs
government
here.
Affairs, yeah.
But like you used the word advocate. You wanted to have a say. You wanted to have a seat at the table. You wanted to be in the room where it happened, to use a Hamilton term. But for the audience tuning in, like that word advocate, look it up. Like, it's your job to advocate on behalf of your borrowers, right? That's your job. It's your job to advocate on behalf of yourself. I mean, I had this whole service that I launched last month. It's called TLOPS Career Advisory Services. For the first time ever, if people are running branches, they're originators, they're newly licensed, heck, they're top producers, our industry has failed at having people on the ground to support them with career advice.
Very true.
There are plenty of recruiters who want to convince you to leave your job and go work for them. But there's very rarely a resource for someone to stand up. So much of what I do in that service, look, full disclosure, I want to promote the podcast. I want people signed up for my newsletter. I want people subscribed to my YouTube channel, right? So I offer this service for free, but it's also a way for me to continue to expand the understanding that this content exists. But when I give the free advice, you know what it is? I teach them to advocate for themselves. Like, you don't need to move companies. Go fight for or stand up for what you believe in. Ask for better, ask for improvement.
Very true.
You joined FAMP because A, you wanted to be more knowledgeable. B, you wanted to be around others who also wanted to be more knowledgeable. But C, you knew it was your chance to advocate or stand up for what you believed in. Yes, it was self-serving because it benefited your organization, but it also benefited the industry. So we're going to get into GA, right? Not grad assistant, not general admission. Right, we're going to get into government affairs. Explain to me and teach the audience, what have you been up to specifically the past 2 years? By the way, this is a volunteer position. Like maybe Orlando will get his expenses covered when he travels to DC or travels to Orlando, but no one's paying him to do this.
Absolutely.
It probably takes away from your production.
Yeah, we lose business because at any given time, 70% of my day, the next 3 days, it's all FAMP.
Yeah, the next 3 days, you're in Orlando, Florida with guys like me and several hundred other mortgage professionals, because we are at the Central Florida chapter's annual trade show.
Annual trade show.
Yep, annual trade show. You're here, you're representing FAMP, which means you're not prospecting, you're not working on deals. And maybe your team's working on deals, but no one's prospecting right now. But specifically, what have you been able to accomplish with your team over at FAMP, advocating for our industry? Walk us through that, what that's like, where you've been, the Byron Daniels of the world that you now know personally. Bill Pulte, maybe not personally, but he at least probably knows the name Orlando Diaz, right? He knows it. His team definitely knows it. But then more specifically, what does the future have in stake? So we'll start with, what have the past 2 years have you been up to?
Well, it started off when I was putting together my government affairs team. One of the persons I brought in was from Kind Lending, Rick Fabrizio. And he told me, he goes, one of the things that we need to hit is the fact that there's the 25% for limited reviews down payment in Florida, while the rest of the country is 10%. And since I only do conventional business in Florida, I had no idea.
Oh, you had no idea that the rest of the country is doing 10% down limited review?
I had no idea.
And we're stuck at 25?
And I said, if I don't have that idea, then I'm sure there's a lot of people that don't either.
Yeah.
So I said, this is what we got to change. This is priority number one. This is unfair that the rest of the country has to put 10% down on limited review condos while we put 25%. So I said, that's a fight worth fighting.
Okay.
And so we went on, we started legislating locally in order to get what we ended up getting as a memorial, basically a bill that in the state legislature that said basically to the federal government, to the FHFA, hey, this is unfair. We want this changed.
So then you went to your local Congress people who then pushed it to Tallahassee because that's the state capital for Florida.
Yeah.
And then Tallahassee took it and pushed it to the federal saying, we can't make these changes, but you can because it's going to be a change to the FHFA.
Yeah.
Okay.
Yeah. It's and we're a state association, but this is really a federal issue that affects our state only.
Yep.
So we started off with a representative writing a letter to Pulte. Then we got that letter and we got Congressman Byron Donalds. We explained to him in D.C. We had a private meeting with him in D.C. and we explained to him how this discrepancy and him running as the front runner for governor of Florida. We said this is something that you have the connections to do and really what I think would be an easy win.
Yeah. Which politicians love those wins.
Yeah, it was, and sure enough, he picked up on it and he pushed it. He wasn't getting as far as he wanted to with FHFA, so he went straight to the financial services hearing. He spoke to Secretary Turner and basically said, look, this is unfair, and we want this changed. So then we got word that a change was coming, like 3 weeks before.
And you got excited.
Super excited. And then I
get out a bottle of that Bordeaux that you like to drink, and you're going to celebrate.
Yeah, I would. I have the specific Bordeaux I would have opened. Yeah. I would have opened. That tells you how it ended up. Then we finally got the mortgagee letter that came out, and basically I started reading it, and I said, oh my God. This is exactly not what we wanted. So basically, we were asking the FHFA to treat us no different than the rest of the country. And they did that. But basically what they did is instead of bringing Florida from 25% to 10%, they just got rid of limited review altogether.
Yeah, we covered that with our coaching community recently. And I got to be honest, I saw that lender letter come out from Fannie, what was it now, 2 going on 3 weeks ago. And at first we're like, oh, wait a minute. Like, because first it was like the headline was the insurance, right?
Insurance.
Like, oh, all of a sudden we can do actual and not replacement, and that's going to be a big win.
More investors are allowed.
Yeah, more investors. And then I have a good friend of mine. Her name is Sue Batello. Shout out to Sue. She runs a $100 million branch up in Fort Walton Beach, Florida. And I have another really good friend, Mike Fitzpatrick, who runs a $100 million branch in like Myrtle Beach, South Carolina. And all of a sudden, I start reaching out to them. They're like, slow your roll, homie. I was like, what are you talking about? They're like, keep going. Good. Like, we lost limited review. I was like, okay.
Yeah.
And then they're going to increase reserves.
Reserves from 10 to 15%.
I was like, oh. And you guys fought so hard for a year or 2 years.
We fought so hard that FHFA felt that it was better to get rid of limited review than to raise Florida from 25 to 10%.
TLOP Unite is not your typical mortgage event. This is the first ever TLOP cruise experience built exclusively for originators. And for 4 days, it's not about the speakers, it's about you. We're talking breakout strategy sessions, real conversations, curated events, and uninterrupted access to a community that helps you grow. If you're serious about taking your career to the next level, this is where you need to be. Space is limited and the price is right. So click the link now and learn more.
So it was, and this was something that we have spent significant amount of time. And when that came out, I was crushed. It took me all weekend really to digest. And then you brought up the Kimber and I had a hour and a half conversation. Like, what do we do now? What's the next step? And really, what we came up in that conversation was that let's try to delay so we can continue to advocate. So one thing is we wanted to see if we can push the 15% reserves to 2028.
Okay.
that is just to give us time.
Are you working on that right now?
Right now, that's
right
the game
now,
plan.
Okay.
That's the game plan right now. Is try to delay and then see if we could move getting rid of the limited review for another 6 months to give us proper time to advocate for this. Whether we're going to be successful at that, I don't know, but it's NAM and FAMP are aligned in that.
Were you able to get the NBA on board with that? Like do you reach across the aisle? I know you are very broker centric. Yeah. And even within the NBA, like sometimes NBA members complain that, the NBA's siding too much with banks, but they're not really sticking up for independent mortgage bankers. But do you, or do you work with?
I feel that way too.
The Community Home Loan Association. Do you work with them at all?
No, but what we do work with is, the last 2 years we've had the strongest relationship with the Realtors Association.
Okay. And
the Realtors were initially brought this issue about the 25% rule back in like 2008, and when we had a conversation with them, they had all this back work that they had done and all this research that they had done, and they shared it with us. And then combined, we worked the FHFA. They did their legislative people and us, and we were the point, and eventually combined, we got our word. But again, the result was not what we wanted.
So your past 2 years, you've been advocating hardcore to try to make condo financing more available.
Yeah, condo reform has been a
condo
huge
reform.
issue.
I like that.
Yeah, the condo reform bill. There was 2 bills that came out, and the second one, FAMP was a stakeholder in. We actually got an iteration of all those bills prior to it going out, and we had our own input in it. And basically, we felt that it was a two-pronged. If we help the condos with reserve studies, and you can't defer maintenance and stuff like that, it's going to be easier for Fannie Mae and Freddie Mac to say, hey, let's bring it up from 25 to 10.
Yeah.
They've cleaned up the condo situation in Florida. But again, they made it easier. We just got all these condos to put 10% in their budget. Now we got to say, hey, no. For the following year, you got to raise it to 15, and that's going to be a tough sell.
It's going to be an issue. It's almost like you went to the restaurant, you ordered like spaghetti with meat sauce, and they brought you chicken lo mein. You're like, whoa! I mean, I appreciate the food.
Yeah.
Right. You're doing something. However, I really don't like chicken lo mein. I really want spaghetti with meat sauce. So that was a big push. And then now I guess you're going to be sidetracked, and maybe some other initiatives are going to get put on the sidelines because now you have to go back and say, no, I ordered spaghetti with meat sauce. You can't do this. So you're connecting with other trade organizations in order to advocate, at a minimum, can we just delay it? Which that's not uncommon. There's over the past 3 to 5 years, how many things have we seen come out? Yeah. The industry speaks up, and we let the legislators know, like, you kind of screwed this up. You kind of don't know what you're talking about. Yeah. Let's let the experts come in and at least delay it. Yeah. Do you know if there's a timeline when they'll even rule on whether or not they'll delay some of those things?
I mean, we're just starting that advocacy now.
Okay.
And so we're working on the assumption that won't happen.
Okay. You're preparing for worst case.
Yeah, we're preparing for worst case. We're going to push, and on top of that, we also, our government affairs team had conversations. Is like, look, let's push this and see if we can delay it so we can have proper advocacy. Give us time to advocate for this and let them know why 15% going from 15% in a year's time is very difficult. That's going to raise HOAs, and it's going to raise assessments.
It makes homeownership less available and more cost prohibitive.
Yeah.
Yep.
And then at the same time, we said, okay, you know what? Maybe Fannie and Freddie are public-private entities. They're in conservatorship right now, but FHA is not. So we need to start hitting FHA to become a bigger player in the condo market in Florida.
There we go. Well, and it just hasn't been, because getting things FHA approved has been
brutal.
I mean, for 20 years, brutal, right? Brutal. I mean, it's not like this is this happened post Dodd-Frank. I'm like, no, I got in this industry. You were in it well before me, but both of us before Dodd-Frank. So is there anything else on a GA, on a government affairs standpoint, that you kind of excites you, but excites you because you're a fighter who wants to go and get scrappy to change your industry for the better?
Yeah, I think that, remember, I have to focus on Florida, and one of the biggest ticket items right now is property taxes, elimination of property taxes. We've been knee deep in that as well. Though I would love it. It is hard to implement.
Is it? And we're not the only state trying to eliminate property tax. I think Ohio's another one. Is it even possible? Because that revenue has to be made up somewhere else.
Yeah, the thing is, Miami-Dade, Broward, Orlando, Tampa, they can survive getting rid of property taxes for primary homes only.
Okay.
It's the smaller counties that in some cases make up 90% of their revenue. How do you come up with a bill that really encompasses all of that and that covers the small counties and the larger counties as well?
Well, even in Orlando, which is where I live, like Orange, Seminole County, Volusia County. Okay, so if you get rid of property taxes on a primary home, look, I'd love it. My even with homestead exemption, my property tax bill is probably $6,000 a year.
Yeah,
right.
I'm
so
at $6,000.
Yes, that's $6,000 I don't have to pay, but that's $6,000 that's not the revenue, whether it's going to the counties, the schools, the cops, the firefighters, et cetera. Do we make that up with sales tax? Do we make that up with?
It has to come out of somewhere, increase the sales tax, or it may increase taxes for second home and investments.
Okay, yeah.
Commercial properties. That's something that they've talked about. Or maybe the thing is that it didn't pass the session, so now they have to have a special session for it. So I don't know, and they haven't called that special session yet, so we don't even know if this is going to happen or not. But I think that if one of the easy ones should be if you're 65 and older, you shouldn't have to pay property taxes. Especially, if you've owned the house for 30 years, you never really truly own it because you're basically paying rent to the government.
Yeah.
But if you're 65 years old, that should be an easy win for the legislature, an easy win for the consumers. My mom, I pay my mom's taxes.
Yeah.
So I would love if she's owned the house for decades. So why should she continue paying?
You know what's interesting? You said about you never own your home outright because you pay the government. Mm-hmm. It's interesting. I was looking at my mortgage statement. I've been in my house for 15 years now. I think I'm down to owing like $90,000 on it, and I will never pay it off because I'm going to sell it the next year or two. But even if I wasn't, my rate's 2.75.
Yeah.
Like I'm never going to pay a dime extra to that mortgage because it doesn't make sense. If I have an extra dime, I'm going to invest it into my 401k, my IRA, or into my E-Trade account, right? But even if I owned my house outright, I looked at my escrow balance. Okay, I'm paying $787 a month just in taxes and insurance.
Yeah.
And I have an HOA of roughly $115 a month. Yeah. So me owning my home free and clear still means I have $900 a month in living expenses that has to be factored in. It's an interesting conversation to have when you're just speaking on behalf of home ownership. Probably not for today's episode because we have to find a way to put a bow on it, and I have more questions, but it's interesting that you brought it up, that I've never heard it explained that way. And I just literally yesterday, looking at my mortgage statement, had that same thought.
If you're a licensed originator who's closing loans, but you're not consistent, this is for you. If you're brand new or just looking for motivation, trust me, this is not for you. Most LOs don't need more information. They need structure. They need proven processes and somebody to hold them accountable. T-Lob's Originator Coaching gives you weekly live coaching, scripts top producers actually use, and step-by-step business systems you can implement immediately. Not someday, we're talking day one. You're not watching videos alone. You're executing in real time with other originators who take this seriously. Right now, you can try it free for 2 weeks. That's 2 full weeks for free. You'll sit in on live coaching calls. You'll get access to the frameworks and see exactly how top producers run their business. If it creates clarity, if it creates momentum, or even if it puts wins on the board, you keep going. If it doesn't, no worries, you can cancel. No pressure at all. Click the link, start the 2-week trial, and finally, build this like a business, not a side hustle.
Yeah, I'm at close to I think $1,600, $1,700 if I pay off my mortgage. So that used to be a full mortgage payment before. And that's just if I pay off my house, which is the American dream, to own your house, not only to have a home, but to own it free and clear.
Yep.
You still got to pay $1,500, $1,700 to own your home.
Yeah, I tell people all the time, what we do for a living, nobody wants us.
Yeah.
Luckily, they need us.
They need us.
But if you think about it, people dream about not having a mortgage, right? So, nobody wants what I do, but luckily they need what I do.
They need.
I want to get your thoughts on this. We don't have time. It may be a whole second episode. In 90 seconds or less.
Sure.
If I said, Orlando, we're going to be talking about originator compensation, and we're going to be talking about W-2 versus 1099. It's 2026. There's been no legislation recently passed that would correct, change, modify, or regulate originator compensation, and also answer the question 1099 versus W-2. Do you have a stance on the topic in 90 seconds or less that you're willing to share on that? And if you don't, that's okay.
Yeah, I do. I think I never liked the change to the loan compensation. This whole borrower paid, lender paid scenario, it's crazy under certain circumstances. And then you have to show the client how listen, I'm going to charge you 2% up front, but then I'm going to give you a credit on the back. All those conversations are awkward. Oh, what do you mean you're going to charge me? And then give me why can't you just not charge me? All of that, I think, that came out of Dodd-Frank, I think, is ridiculous and should be should be changed. Why should somebody mandate what I make? If I'm selling it out, if I want to sell stuff more expensive than anybody else, then I run the risk of not having clients.
Yeah.
And if I want to make 4 points on a deal, maybe I'm not going to get as many clients, and then the market will dictate that I need to lower my rate because the other shops next door are going to sell it for cheaper. Why should it is? I believe that the current compensation rules are anti-competition, and I think that it's wrong for them to dictate how much we could make. I think it's wrong. I know that NAM is touching on that issue right now. It's a federal issue.
Yes, it is.
So I try to pick my lanes.
But it's becoming a state issue because the CFPB's been defanged.
Yeah.
At which point, these state regulators who weren't doing a whole lot. You and I are good because our states are state, right? Florida's Florida.
Thank God for
They're
Florida.
going to stay away from being in everybody's business and over-regulate. Some days I wish Florida would regulate a little bit, right? I wish there was some enforcement of the rules that we do have, but that's not going to be us. Other states, though, those states are going to step up. But I am happy to hear that NAM on the federal level is going to advocate. I'm hoping the NBA is going to advocate. I ask because my stance has been we, as an industry, are 100% disregarding LO compensation rules.
Yeah.
The entire industry is doing this on a whole. It's not broker, it's not banker, it's everybody. I'm not here to state whether or not the rules are right or wrong. All I'm saying is we either have rules and we follow them and we enforce them, or let's go back to the way it was. At which point,
I would love.
When the way it was, yes, some people got hurt. They did. But most people got a better deal. By the way, brokers and originators, you need to understand this. You made less money back then. You did. It was a freer market, but it was also a cheaper market.
Yeah.
And that cheaper also meant your compensation. Now, with loan sizes being where they are, I think loan originators can afford to actually net less. I mean, heck, I remember being happy making one on a $136,000 loan.
Yeah.
Okay, I promise you this, my cost of living has not gone up as quick as average sales price and average loan amounts have. Not for today's conversation. I just want to get your take because I value you, your expertise, and obviously your role. How about 30 seconds or less, this 1099 W-2?
Yeah, as a business owner, I first started off paying everybody 1099, and it was through going to FAMP meetings that they were saying, you're wrong, this is you're going to be audited, and it's not only going to be audited by the state, it's going to be sent over to the IRS. So I said, you know what, I'm going to play it safe, and I'm going to W-2 everybody. Mm-hmm. So that's now... Are they truly, the question is always like, are they truly really independent contractors? Because they can't really go and do a loan with somebody else. So they can't go and say, you know what, I'm going to do this FHA loan with this other company. So they're not really truly independent contractors. So I said, you know what, I'm going to play it safe and pay everybody W-2. But if they are, according to my compliance attorney, he said, look, they're considered, the IRS wants them to, they're not really considered independent contractors. Just pay them W-2 and you'll be safe. It's a cost to the owner. I have to match those employer taxes as well. So it costs me more money. So when I'm really looking how much I'm making on a deal, I have to take away the fact that I got to pay employer taxes on it. And it actually, the profit margin then, for each loan starts to diminish. So I think that there should be a clear ruling on it.
Yes, that's honestly, it's where you and I are the same. I don't care what LO compensation rules are, and I would advocate they need to be changed. Like I would advocate
Agreed.
and be a part of any committee you want to put together that wants to go march on DC or Tallahassee and be a part of that. But until that happens, I would love to see true enforcement of the rules we have, because there's many of us are stuck in purgatory. You got those that are rigid and they're still following the rule as it's written. You have those that are like, rules? What rules? There's no rules. Yeah. And then we have the rest of us in the middle. And it ends up becoming a competitive disadvantage when there's not clearly defined rules that are regulated.
Or you have somebody that comes up to you and said, well, the previous shop I was in was paying me $10.99. And I'm like, well, in my shop, we don't do that.
Correct. And I'm still baffled. Why do originators want to be 1099? I don't get it. Like,
well, because they can write off more stuff on it.
No, they have the ability to write off, but what are they writing off? Like, what do you, because
car, who knows? And at the end of the day, on a W-2 is paying your.
The standard deduction is like $26,000 for a married couple.
Yeah.
You don't have $26,000 of business expenses. I know someone's going to be like, oh, but I pay for credit reports. I pay for my LOS. I pay for my CRM. Okay. But that's a product of the environment you're in because you're also trying to make 225 basis points.
Yeah.
So the rest of us have that commission deducted. You still don't need to be 1099 to have things commission deducted, right? Or don't make 225, make 150. At the end of the day, you can see I'm getting fired up.
Yeah.
I wish there was a more national debate with true thought leaders.
Yeah.
Not Instagram and TikTok influencers, not somebody who has been licensed for 3 years and has funded 30 loans over those 3 years. I'm talking real leaders in the industry on both sides, broker and banker. I wish we get together and talk about it, but that's for you and I getting together maybe later this year.
Yeah.
You know what? Let's do it when we're together in August.
Let's do a part 2.
Let's do a part 2. Will you real quick talk about the August event, and then we'll find a way to get our parting shots and get out of here.
Yeah, so thank you. Appreciate the avenue to speak not only about myself, but really about FAMP. Our state trade show is August 5th through the 7th. It is the biggest trade show of the year, the biggest independent mortgage trade show. The year, like you mentioned, we have national speakers. We have Logan from Housing Wire, which is a big draw. And this year we're going to add a little bit more bells and whistles to it. And we're expecting over 2,000 attendees. We have 100 so exhibitors. It is, the breakout sessions are phenomenal and timely. I spend a lot of time with the trade show committee picking what sessions we're going to have that are relevant and to not just, hey, we're going to do a non-QM session. Specifically, what are that non-QM do people really need to know about? Because before, somebody was doing 10% of their business was non-QM. Now it's 60% of their business. Non-QM has grown like crazy. So that trade show is special. It's great. It's not only the fact that you're getting information, it's the camaraderie. It's the finding when you talk about a deal that you just can't place and you're talking to another mortgage guy, said, did you try doing it like this?
Yeah, your after hours events are always my favorite. I mean, it's how I became friends with Steven at Redder.
Yeah.
Right. Steven at Redder, who, I mean, if you're not using that service for data and data analytics, it's amazing.
Yeah, it's amazing.
And Steven's the founder and CEO of Redder. Yeah. I met him at your event at a bar. And what was really cool for me is he walked up to me and thanked me for the podcast. He's like, dude, I'm a data guy. I come from the real estate world. I'm learning about mortgage by tuning into your podcast.
Yeah.
Right. But it's also how I met Barry Habib and spent time with him. Dave Savage and I had drinks at the bar. And then later Dave came on the show. Like, this is what you get. It's right. It's the conversations. It's the parties. It's the dinners. And yes, the breakout sessions and the speakers are awesome.
Career advancement as well. You never, lifers who have been in the industry have worked together in certain jobs, and then they are often different. Now they're competitors, but they're still friends. Yesterday I saw a group of non-QM lenders that work for different non-QM lenders, and they were out to dinner last night together.
Yeah.
That I found that awesome because I think that's what FAMP does, and that's what the trade show does. It fosters the mortgage community.
And it's Orlando, Florida, right?
It's in Orlando, Florida.
It's in Orlando. It's in the summertime. Bring your kids. Bring your spouse. Kids. They can hang out at the theme parks or hang out at the pool.
We have a lazy river in there.
Yeah, while you're getting your mortgage on. I can't wait. I hope T-Lop can be a part of the event. No pressure. No pressure. But
that's already a given.
But. Okay. Regardless if you're in Florida or not, I'm speaking from experience. It's an event that you don't want to miss out on. It's FAMP's annual sales conference. Look, y'all, if this is your first time tuning in, maybe you're a friend of Orlando's and you're like, hey, what's he doing on this podcast? I'm going to say thank you. Thank you for tuning in. If you're on Spotify or Apple, do me a favor. Give us a 5-star review if you like today's episode. Those 5-star reviews is how Apple and Spotify know to invite other people like you to tune into our content. If you haven't checked us out on YouTube, you should. One, you could check out Orlando. see what it looks like in person, get a glimpse of this 80s themed event that we're recording live from, right? This is the Central Florida FAMP's. It's their annual trade show. Shout out to Dawn, by the way.
She's awesome.
Shout out to Dawn for putting on such an amazing event, having Orlando come up, asking me to be a part of it. So you can see all of that on YouTube. You can also see coaching videos and sales training videos all for free. So go to YouTube. We are at TLOP Entertainment on YouTube, or just type in the Loan Officer Podcast on YouTube. You'll find us. And then lastly, if you're an originator looking for coaching, right? You want business coaching, you want sales training, you understand that you shouldn't go at this alone. We specifically have built the number one value in business coaching for the mortgage industry. We are literally delivering tens of thousands of dollars of value for a fraction of the investment. All that information is found on our website, which is tloponline.com. That's TLOP online.com. He's Orlando Diaz, president of FAMP. I am Dustin Owen, the founder and host of the Loan Officer Podcast. That is all the time we have for you today, but we do look forward to catching you on the next episode. Peace.